You have a very specific way that you look at infrastructure and classify it. What would that be?
If you look at it globally, there's different buckets of infrastructure, and people understand infrastructure in many different ways. From our perspective, it's core. So we have regulated utilities and contracted renewables as one of our buckets, and those would be defensive, a higher income, really less leverage to GDP on the one side, and on the other side we have the user pay assets. That would be more your traditional infrastructure, your ports, your rail, your airports.
What kind of companies does that kind of allow you to focus on?
We're looking at those assets that have a physical asset, that have a cash flow around that physical asset. They're beneficial to society overall, a more holistic view on moving goods and services. And there has to be a mechanism in place for the investor whereby either through regulation or concessionary contracts, the investor has a mechanism to be paid.
A lot of people have looked at infrastructure as kind of a niche holding or something peripheral to their portfolios. I know ClearBridge looks at it as a core holding in people's portfolios. Can you just expand on that?
If you're looking at infrastructure from an overall perspective, there's 3 or 4 really characteristics that you want to make sure that you're looking at. One, it's significant growth. There's a secular growth story in the infrastructure space. It's becoming more predominant now as we see more and more governments doing a lot of infrastructure spending. We've seen that in Europe. We're seeing that in Canada for sure right now. And if the governments are going to spend money on infrastructure, they can't afford it. So they're looking for private money, for public assistance, and it's really in the sweet spot of listed infrastructure. It's transport and energy, which is where we really dominate. But it's also a story about stable, predictable income. Most of our names are either in regulation or have some concessionary basis that allows for predictability of cash flows. 90% of our names have some sort of characteristic that allows for price increase or cost pass-through. So we are a pure inflation hedge. And then finally, it's diversification. We have great downside protection, but also participate on the upside.
Is now the right time for infrastructure? I mean, what I see is a lot of global governments doubling down on infrastructure. You mentioned energy, but just what's ClearBridge's view on is now the right time to get into infrastructure?
It might be the golden age of investing when it comes to infrastructure, Dennis, to be honest. I mean, there's so many factors. A lot of networks are being built out. Transportation, we're having changing in trade routes, so that's a positive. The AI data center build out, there's so much dry powder that's looking for an investment home, and some of that is coming to the listed side. So unlisted names are participating by purchasing listed or parts of listed companies.
If you had to sum it up for everybody, either with infrastructure or with ClearBridge's approach to infrastructure.
We have 3 things that make us different than other peer groups. One, we're infrastructure specialists managing funds. If you're going to be in infra and long-dated assets that have a regulatory aspect to them, you must understand regulation, and I think that we really do. The second point is risk is paramount in everything we do. So although there might be 700 or so GICS classified names globally, a lot of those don't get into our universe. We're looking for that unlisted type return over a cycle. And finally, 3, we're benchmark unaware, but we manage internally to G7 inflation plus 5.5. So we're trying to get a 5.5% real return over a cycle. And that has lots of benefits. It allows us to move up and down the market cap spectrum. It allows us to change economic sensitivity. It allows us to have geographic dispersion that you might not be able to get if you were adhering to a benchmark.
How well have you guys done on achieving that goal? And I know this mandate has been around for a number of years.
Although 5.5% institutionally is a larger number than it has been in the past, we've managed to maintain that performance over the long period of time.
Well, congratulations.
Thank you.